Today we will discuss about forex trading for beginners. A complete guide to cryptocurrency trading for beginners. What is trading? Trading is a fundamental economic concept that involves buying and selling assets. These assets, these can be goods and services where the buyer pay and the compensation to the seller. In other cases, the transaction can involve the exchange of goods and services between the trading parties. In the context of a national market, the assets being traded are called financial instruments. These can be stock, bonds, currency pair on the forex market, options, futures, margin product, cryptocurrency, and many others. If these terms are new to you, do not worry, we shall explain them all later in this article. The term trading is completely used to refer to short-term trading where traders actively enter and exit position over relatively short time frames. However, this is this is a slightly misleading assumption. In fact, trading may refer to a wide range of different strategies such as day trading, swing trading, trend trading, and many others. But do not worry, we shall go through each of them in more detail later. What is investment? Investing. What is investing? Investing is a allocating source such as a capital with the expectation of generation of profit. This can include using money to fund and kick, kick, kickstart a business or buying and with the goals of reselling it later at a high price. In the financial market, this typically involves investing financial instruments with the hopes of selling them later at a higher price. The, the expectation of a return is core to the concept of investment. As opposed to trading, investment typically take a longer term approach to wealth accrual. The goals of an investor is to build wealth over a long period of time. There are plenty of years to do that, but investors will typically use fundamental factors to find potentially good investment opportunities. Due to long-term nature of their approach, investors usually do not concern them with the short-term price fluctuation. As such, they will typically stay relatively passive without worrying too much about short-term losses. Both traders and investors seek to generate profit in the financial market. Their methods to achieve this goal, however, are quite different. Generally, investors seek to generate a return over a longer period of time, think years or even decades. Since investors have a larger time horizon, their targeted return for each investment tend to be a larger as well. Traders, on the other hand, try to take advantage of the market volatility. They enter the exit position more frequently and may seek smaller return with each trade. Which one is better? Which one is more suitable for you? That is for you to decide. You can start educate themselves about the market and then learn by doing. Over time, you should be able to determine which one suits better your financial goal personally and trading your profit.